Welcome. In this video, when will Zbcn coin correction end? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. Carefully analyzing the chart, it was clear that price action had been trapped in a pennant pattern for some time. While such patterns often signal a continuation of the previous trend, they also cause traders to remain cautious until a specific direction can be determined. The pennant pattern represents a progressively narrowing movement of the price within a given area. This narrowing process indicates that the ongoing struggle between buyers and sellers is getting tighter and tighter, and a breakout is inevitable. Such structures are extremely important in technical analysis because the direction of the breakout largely determines the character of the next price movement. For a certain period of time, the pennant pattern in question caused the price to move in a tight structure with a slight downward slope from the horizontal. While in this pattern, traders usually go into a waiting mode, because it is uncertain when and in which direction a breakout will occur. However, as past experience has shown, the direction in which the price breaks out in such patterns is of great importance and is usually followed by sharp movements with high volumes. A similar situation occurred in this analysis. The pennant pattern was patiently watched for a certain period of time, closely monitoring the moment when the price would break out of this structure. And finally, the expected breakout happened, but the direction was downward. As the price approached the lower boundary of the pennant, it made some effort to hold on to this area. Although this behavior suggested that some traders were trying to take a position here as support, the selling pressure was stronger and the price broke this important technical support area to the downside. Such breakouts help to decipher not only the technical patterns drawn, but also investor psychology. Because when a support is broken, it shows that many participants in the market no longer trust that area, and panic selling kicks in. This is why pennant patterns and their breakout directions are so critical. A downside break of the pennant technically signals a continuation of the bearish move. In this context, this decline is not surprising, but should be considered as the realization of a scenario that technical analysis has already pointed out. Because, as we have emphasized before, the breakout of patterns is one of the most reliable signals in technical analysis. The horizontal movement of the price without volume during the squeeze in the pennant is often interpreted as the calm before the storm. The downside breakout and continued decline following this calm is an instructive example for this analysis. However, the important point here is how this decline can be interpreted positively. Each breakout also marks the beginning of a new technical structure. A price breakout to the downside offers new opportunities for technical analysis. Such structures also serve as an important warning for traders to reassess, identify new areas of support and resistance, and follow the market more carefully. Moreover, one of the most important rules of technical analysis, breakouts matter, was once again confirmed. This strengthens the credibility of the discipline of technical analysis. When pennant patterns are formed, especially on higher time frames, their breakouts are more powerful and effective. The breakout in this analysis was also remarkably clear and voluminous, but we can't judge the analysis by the pennant alone. Let's look at other metrics. Stay tuned. When we evaluate it in the context of Elliott wave theory, it is noteworthy that the current price movements are quite meaningful and proceed in a structure that complies with technical rules. When we look at the current chart pattern, it is seen that the price is in a certain correction process, and this process points to the second wave according to Elliott wave theory. This second wave is generally defined as a short-term correction phase of the main uptrend and represents a period of significant opportunities for investors. The second wave usually partially reverses the gains of the first wave. This pullback can also be interpreted as a short breathing space for the market. At this point, investors have the opportunity to reassess the market. How deep this correction will be is often predicted by Fibonacci retracement levels. In particular, the 0,618 and 0,786 levels stand out as the areas that attract the most attention in technical analysis and where the price is expected to make a turn. These levels are the critical technical zones that investors closely follow and where the probability of a price reversal increases. The current price action suggests that the second wave is in the process of maturing and is nearing its end. The decline in volumes and the slowdown in momentum indicators as the price moves down step by step may signal that the correction is nearing its end. Analysis in light of the Fibonacci retracement levels shows that the price is heading between the 0,618 and 0,786 levels. These areas stand out as potential turning points now, as they have in the past. This is because these levels are technically reliable support zones where many large investors have started to buy. If the second wave ends at these levels, the third wave is expected to begin next. According to Elliott theory, the third wave is defined as the episode with the strongest and most voluminous movements. Therefore, if the second wave ends at solid support levels such as 0,618 or 0,786, this can be considered a very positive development, not only for the price, but also for the entire market structure. Because the third wave could signal a strong uptrend, both in terms of technical analysis and investor psychology. Another positive aspect of this technical correction is that it presents an important opportunity for investors who want to join the market or strengthen their positions. This is because strong rallies usually start from solid support levels. If the price breaks through these support areas and encounters a strong reaction from there, this could indicate both that buyers are re-entering the market and that the overall market sentiment is turning positive. In such a scenario, the third wave could begin in a much healthier, more stable and stronger manner. At the same time, such corrections also play an important role in terms of investor psychology. A large portion of market participants may find these pullbacks unsettling, but for savvy traders, such declines create the opportunity to open positions at more favorable levels, rather than trading higher. This makes second-wave corrections an advantage for traders with a long-term mindset. As a result, when the price is in the process of a second wave, it indicates that the market is making a healthy correction and gathering strength. Such technical pullbacks should be considered extremely positive, especially if they occur at the Fibonacci levels of 0,618 and 0,786. Reactions from these levels will determine the direction of the next big move and may trigger the start of a new uptrend with the third wave. In particular, a turn signal supported by an increase in volume may indicate a renewed confidence in the market. If the price holds at these critical levels and shows an upward reaction, this would be a very strong signal both technically and in terms of investor psychology. Therefore, it would be much healthier to see the current correction phase as a preparation for a bigger and stronger upturn rather than an end. Analysis of the RSI indicator reveals a very remarkable and potential structure. There is currently a falling trend line that is formed on the RSI. This line serves as an important technical barrier that shows that the downward pressure continues in parallel with the course of the price in recent periods. Interpreting a momentum-based indicator such as the RSI with such trend lines gives traders not only the current momentum, but also foreshadows possible trend reversals. Therefore, this falling trend line may be more than a simple visual element, but a strong signal of the bigger picture. According to our observations, the RSI has touched this falling trend line multiple times, but has yet to break out to the upside. Each contact actually indicates that the price and the RSI, which represents momentum, approached a certain psychological and technical level, and then pulled back under selling pressure. Such recurring contacts are considered very valuable in technical analysis because they demonstrate the solidity of resistance or support levels and the importance that market participants attach to these areas. However, a positive picture should not be overlooked here. The fact that the RSI has approached this falling trend line more than once and experienced less severe pullbacks each time can be a strong sign that sellers are starting to lose their strength and buyers are becoming more willing. In technical analysis, such structures are often referred to as pre-break accumulation periods. That is, as the market tests a certain level, resistance to that level weakens, pressure fades, and eventually a breakout becomes inevitable. We should expect the RSI to break this trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.